Nigeria's stock exchange, the NGX, is proposing allowing dollar-denominated bond listings and potentially expanding this to stocks with the aim of easing foreign currency access for companies in Africa's largest economy. The Nigerian exchange, of course, is targeting companies operating from the country's special economic free trade zones and those earning foreign currency, according to Chief Executive Officer Temi Popola. Let's take a look at a quote from Temi Popola in an interview. Yeah, here's what he said. He said, "Our primary objective is to enable these companies to issue bonds denominated in dollars and eventually offer equity in dollars as well. It could potentially address the challenges posed by fluctuations in foreign currency." Sounds like a very interesting idea. Joining us to discuss further from London, Mr. Johnson Chukwu, Group CEO of Cowry Asset Management. Good morning, sir. Thank you so much for joining us. What do you make of this consideration to list dollar-denominated securities on the NGX?
Good morning, Lotus. Thank you for having me. For me, it's a very futuristic thought that Temi came up with. You can actually call it as part of the long-term strategic plan of NGX. Why do I say it's a bit futuristic? In the sense that a couple of things have to take place for you to have dollar-denominated bonds listed. In the first place, if you have to release those bonds, they have to also be issued here. And issuing those bonds means you're going to issue foreign currency debt instruments locally. And that the challenge with that at present is that our local currency, that Naira, has not achieved convertibility. So you need to a currency that is convertible so that people can move from Naira to dollar and dollar back to Naira. For you to have a public offering or issuance of a dollar-denominated debt instrument locally. Currently, Nigerian entities do that, but they do it as Eurobonds, and they are listed on international bourses like the New York Stock Exchange or the London Stock Exchange. But to have it listed here and traded here simply means that people should be able to move from Naira position to dollar position to trading, to invest in those instruments, as well as move back to Naira at ease. But we have not achieved that level of currency convertibility. That would be a constraint, and that's why I said for now, it's more of a strategic, futuristic intention of NGS. But it is positive that we are taking in that direction. It simply means we are beginning to imagine that we're going to, in the near future, achieve local currency convertibility, and then we can actually trade other currency instruments on our bourse.
Okay, fantastic. And it's good to be looking into the future and thinking about these things. What about access to foreign exchange, which is, it's in the papers, it's everywhere. It's something you've talked about it all the time. Is that not a challenge or a hindrance to this plan?
Yeah, that's why I say that. That's why I call this a futuristic plan, a kind of what you can, a strategic plan where you're looking at what you will achieve in the next 5 years or thereabout. Of course, the access to dollar will remain a constraint in the immediate. By the time we restructure the economy, it shouldn't be a problem in the future. But as we speak today, because you don't have convertibility in your currency, you can move your local currency, your balances from Naira to dollar and move back to Naira. It's not, you must have an underlying transaction to move your Naira to dollar position, and you must have a trade transaction that involves foreign payment, either from A or from M. So that will remain a constraint. But like you have in other countries, like where in England here, those are not issues. You can move from pounds to dollar to euro at will. It's just a matter of telling your bank, I need you to convert so amount of pound sterling my position to euro. And then they will do it at the speed of light. So we haven't achieved that. And you can only achieve that when you have liquidity in your currency market. We have not achieved that liquidity in the currency market. We will achieve liquidity when we have a reasonable level of capital flow into the country, so that the demand for FX is made by supply, or that supply begin to outstrip demand. That's when you have that liquidity. So anybody who has a need for foreign currency can easily access the foreign currency. At that point, central bank will have to remove all the constraints or barriers or the regulations around accessing FX, because that also has to go, so that you don't need to go and submit it from A or from M before you can access FX. You cannot just convert to any currency of your choice if we have that liquidity. So for now, it remain a constraint, but in the near future or in the medium to long term, when we get our economic situation right, it shouldn't be a constraint.
There's some considerations that they've looked at. So bonds, equities, they're also looking at listing the stocks, and also talking to the SEC about dollar-denominated dividends. From the perspective of inflation, purchasing power, is there any fear that if this was to take off, that investors would just abandon naira-denominated securities and flock to the dollar side?
Well, that theoretically, yes, but in practice, it's not going to be that easy. Like I have emphasized here, you don't have that convertibility. The regulations around foreign exchange in the country constrain you from just moving your naira to a dollar, at least at the official window of the market, unless you have to go to the parallel market. Of course, you have to pay a huge premium to be in the parallel market. So, but the key thing about listing dollar-denominated bonds, of course, if you list dollar-denominated bonds, it also follows that the coupon on those bonds will be paid in dollars, because you cannot invest in dollars and expect to be paid in naira. So if you also list dollar-denominated equities, then it also follows that the return on those equities, in terms of dividend payment, will be in dollars. So that will, a lot of changes have to take place in our regulatory environment. One, you have to go to SEC to approve the listing of those bonds and equities, and also the payment of dividend. You have to go to the central bank to amend the foreign currency regulations of the central bank to allow for payment of dividends in dollar, as well as payment of coupon in dollar. But like I also said, those things will come when you have the liquidity and you are no longer worried that there could be situation where people could dollarize the economy. People could move away from naira to just hold dollar assets at a time when we have very limited supply of dollar. So I don't think it's something that can happen right now, but it's something that can happen in the near future when we have improvement in the level of liquidity of foreign currencies in the economy.
Mr. Johnson Chukwu, you touched on a very hot button topic, if that dollarization of the Nigerian economy. Where do you stand on that? Because look, at Rise News, we were in Accra for the Afrexim Bank 30th anniversary celebration. We were in Sharm Egypt for the AFDB, African Development Bank annual meetings. We were in Abidjan for the Africa CEO Forum. In each of those cities, Accra, Sharm el-Sheikh, Abidjan, the dollar is used side by side with the local currencies. So the Ghanaian cedi, the Egyptian pound, the CFA franc. Is this dollarization, is it overblown in Nigeria, or is it accurate? Where do you stand on this whole dollarization talk?
Well, I don't think we can say our economy is facing that challenge of dollarization, because today you really can't go to a shop and try to pay with dollar. There's no shop. I'm not sure there are many shops other than international hotels that will accept dollar payment for transactions. Some economies permit for dual currency within the economy. Most countries do not allow that. I don't think you can, even here in England, you can't go to a shop and start paying with dollar. Most shops may not accept dollar. In fact, some institutions, if you want to pay and they give you an option of paying with pounds or dollar, they will tell you they would rather take pounds because they have to deal with exchange rate fluctuations. So the inherent in a dual currency environment that there's also exchange rate risk. But that all happens in most instances where the local currency is not stable and people are more comfortable holding dollar as a medium of exchange, as a currency. So we haven't got to that point. We are at the verge of that because of the huge depreciation of the local currency in the past few weeks. A lot of Nigerians are becoming quite apprehensive in holding naira as a store of value and maybe migrating to dollar. So, but we don't pray we get to that point. Those countries you mentioned have also deal with the issues about instability in their local currency. I know Ghana has suffered severe depreciation of its local currency in the past couple of years. Same with Egypt. I mean, Egypt has been supported by the likes of US in terms of providing them support of balance of payment support to mitigate against huge fluctuation in their currency. I don't think we want to get to that point. It's always good to make sure that your local currency have some level of stability in terms of its exchange rate with other global currencies, so that people have confidence in that currency, your local currency, as a store of value.
Thank you, sir. Since we're talking dollars, I want to switch to oil revenues. Business Day has an article out today looking at the half-year 2023 oil revenues in Algeria, Libya, Angola. We wanted to focus on just Algeria and Libya. Algeria, half-year, at least January through May, their Sonatrach, that is their Nigeria's NNPC alternative, looked at, we brought in $21 billion January through May. The National Oil Corporation in Libya, they brought in 6.95. We annualize these figures, and for Sonatrach, it comes out to 42 billion for a full year. For Libya, it comes out to about, I think, 13.9, almost 14 billion. So what's the lesson here for us? We don't have NNPCL's figures yet, as far as what we brought in, but what's the takeaway?
Some of these countries have their national economy operating as semi or near autonomous businesses. We are just trying to put NNPC limit in that frame, in that economic frame, to operate as a private sector driven business entity. The issues around the asset holding of NNPC. Today, NNPC is still a quasi-government entity. It's owned by the Federal Ministry of Finance and the Ministry of Petroleum Resources. And you can see interventions in the management of NNPC as it relates to taking business decisions. NNPC has $3 billion, which is to support currency position of the country. That is outside its own primary responsibilities. So if that support comes, and what I understand is that they sold crude upfront, those crude would have been sold at a discount, which means they were not sold at commercial rates. So in that case, if they were sold at a discount for the purpose of the national treasury, you can understand why NNPC may not come out with a kind of performance, a financial performance that comparative national oil companies in Africa are achieving. Because if you have to sell your assets at a discounted rate to provide money to central bank to support the currency, certainly that you are not going to certainly earn commensurate return on that sale. And if you compare your earnings per barrel of crude to what your competitors like the Egyptian National Oil Company, the Angola National Oil Company, Nigerian National Oil Company are earning, you will certainly be at a disadvantage.
Sorry, one final question for you. Arise business analyst Chika Mbonu, he has said that Nigeria should declare a state of emergency in the oil and gas sector. Chika has talked about the oil theft. He's talked about the aging infrastructure. What do you think about that?
I agree with him, but I think we should even go beyond that. We need to declare a Marshall Plan on our economic management, which will touch on the oil and gas sector, the entire value chain oil and gas sector, right from the upstream down to the midstream up to downstream segment of that oil and gas sector. We should talk of our infrastructure support. We should talk of energy supply support. We should have an integrated master plan or Marshall Plan that will deal with how to revive the economy. Because without that, we will be working in silos and we may not achieve the level of recovery we need, given how deep our economy had gone into the black hole.
Mr. Johnson Chukwu, Group CEO, Cowry Asset Management, joining us from London. Thank you, sir, for taking the time to talk to us about the futuristic plans of the NGX and Nigeria's oil revenues. We appreciate your time.